We couldn't have done that without a pure SAP digital core banking platform. And we couldn't have done that with great partners such as Risa Bank and Frank Bobarak, who's the head of product there, and Ripple. And Ripple.
Hey guys and girls, how are you guys doing? Welcome to Future Trend today. Thanks for tuning in. It's been some time, but I'm just gonna get right into it, so I hope you guys are ready. So yeah, where do we start? It's obvious that there's a lot of geopolitical activity that's been going on over the past few weeks and months, and that has a lot to do with the U.S. elections, right? So that goes without saying. I, on the other hand, have personally chosen to stay out of the ring. However, I can't ignore the side effects that it poses to my portfolio as a speculative investor and my investment strategy, which, in case you were wondering, has a lot to do with the US, especially from its stance on regulatory clarity and taxes on digital assets, amongst other things, right? So, especially with the fate of my favorite assets, regulatory clarity still in limbo, I've just chosen to focus on factors that I can control and still focus on assets that have a lot of room on the upside, hopefully. But before I get into all of this, I think it's important for you guys to know this. I am not a financial advisor, and the following is simply my opinion and shouldn't be taken as financial advice. I would say probably go consult with your own professional financial advisor if you are uncertain, while still using your own discretion with the research that you conduct. Because there's quite a lot of fodder in this space. However, a great rule of thumb is to ask your advisor whether their strategy involves any two of the first four in the title of this video. If they're able to explain it to you in a compelling and a facts-based manner, then I would support taking their advice. But here's why I say this. Traditional bank-based financial advisors are taught to peddle advice that favors their employer, which is the bank. Buy stocks, invest in these funds, and so on. This advice couldn't, or should I say, this advice could maybe have worked from 2016 to about maybe Q3 of 2020, this year, depending on where and when you're watching this, right? So it could be worth your while listening to that advice, but things are a little uncertain, and that's probably going to be the case until this comedic election is pretty much over. But if there's anything that you take from this video, you should please hear this part. I am personally a contrarian, and that's everything you need to know about my investment style and strategy. Heck, it's probably why you're still watching this video. But let me explain it to you in a way that I believe, a series of popular quotes would help you fellow crypto punks and speculative investors understand better. You guys have probably heard of the terms buy the fear and sell the news, or buy when there's blood on the streets, or what's the other one? Don't go with the wave, be the wave. I mean, there's no need for me to go any further, but when everyone knows about something in the investment world, it's typically too late to move on it or to make a substantial enough profit to make it worth your while, right? So those are all things to consider, right? So this is true for three of the asset classes in the title of this video. Let's take Bitcoin, for instance. In about 2013 and 2016, I personally knew of the negative mainstream media characteristics of Bitcoin, and that it was, used by criminals, it's bad, it's used by drug lords, and A, B, C, D, E, F, G. Like, everything under the sun was peddled about Bitcoin around that time. But let's think of it this way. If you had bought into it or held or even accumulated, it could have very well changed your life in a positive way come the fourth quarter of 2017, when the most notable bull run in the crypto asset class happened. Everybody remembers 2017, late 2017. So keep that in mind as well. Let's take a look at real estate now, which is what the RE stands for in the title. If you took advantage of the market right after the housing crisis of 2008 and 2010, give or take, you'd likely be able to sell at a substantial profit today, right? So though it's a traditional and risky asset class, real estate and raw property in general is not a bad investment portfolio allocation. But it really comes down to your your sound research around the location to determine the long-term trajectory or direction of your investment's value. And that could be like, questions like, will it appreciate over time because of more businesses, services, or government investment in that location? Or do you value privacy and you'd prefer to be located in an area that is relatively further away from an urban setting, minimizing the risks of issues in an urban center or area like rioting? Or maybe you prefer that because you maybe want to, own some property which is like apartments, that are closer to work, closer to schools, shopping centers, and the like, So it really comes down to your personal preference, but these are all factors that affect the price of property and real estate in general. All right, so shifting gears to my favorite asset class or investment type, precious metals. All right, so gold and silver in particular, let's just focus on those. It goes without saying that they have always been a stable and reliable means of exchange of value for centuries, right? So if I was to hypothetically convert my savings account into into gold and silver holdings, and I held it for 20 or 30 plus years, I stand to gain a lot in appreciation against fiat currencies. And which is why I believe this is a sound investment for anybody in general, especially now when you are dealing with, times of uncertainty when it comes to economic balance. And if, let's say, they're good for countries that may be at risk of default. And it goes without saying, in my opinion. So ultimately, for the traditional sense, not too many millennials are really into precious metals, but for those millennials that have been following financial role models like Warren Buffett for multiple years, he's always been stock market heavy, right? And just recently, he invested in a gold mine. And I think that goes without saying. It's a very telling move to make by an individual who has peddled that, gold is a dormant asset and doesn't really do too much. And it's true. Technically speaking, it doesn't do too much, but it's a good store of value. So as a savings, I think it's your best bet. I wouldn't necessarily worry too much about the fundamentals when it comes to something like gold or silver, because at the end of the day, no one will tell you better than Lynette Zhang. Those are pretty much very suppressed assets. So at this point, there's only an upward trajectory when it comes to their overall valuation. All right, so yeah, that's my take. I think personally, those are good places to start. Ethereum, XRP, gold, silver, and real estate. I, for one, think it's a good idea to, position yourselves early enough in the emerging markets or asset classes that see the most room or have the most room to climb higher, and roll that into something like either silver, gold, and real estate as well. So my strategy personally has a lot to do with that. It's just a rollover. Unless you're well versed in your technical analysis and you're able to at least gauge the direction of the stock market or any market in general, in case you're an options trader or futures trader, there are a lot of ways you can essentially set up your odds in your favor, right? So if you're ultimately trying to increase your net worth, I would say it's a good idea to consider these ones. But keep in mind also that you should never invest what you can't afford to lose, right? No investment is bulletproof. There's no such thing as an investment that is beyond, dropping, or there's always risk. That's also something to consider. So make sure that you're evaluating your circumstances appropriately and only investing what you can afford to lose. Don't overinvest, whether it's in precious metals, real estate, or any of the two that I've mentioned, Ethereum or XRP. But before I actually leave you guys, the reason I picked Ethereum and XRP in particular is because the second and third aren't the second and third in vain. There's a reason why they are second and third. The first, in my opinion, is literally the poster boy. Bitcoin is the poster boy. Everybody knows it because it's brand recognition. It also draws people's attention to cryptocurrencies. But Ethereum is literally a technology that central banks have been testing for payments. And if we're talking about payments, cross-border payments when it comes to small and medium enterprises, Ethereum was tested and has been tested for a few years by the world's leading and emerging banks and businesses for quite some time, right? So at the end of the day, there's a lot of documentation that leads in that direction. But when we're talking about efficiency in the space and overall adoption, it comes down to regulation, it comes down to taxes, it comes down to a lot of legislative fodder and verbiage. There's a lot of upside when it comes to cryptocurrencies in general, and that leads us to the focus on XRP. There's a reason why that is third in the cryptocurrency sphere. Obviously, there are a lot of other very promising projects that have to do with governance and improving legitimacy of funds and supply management and the like. But XRP in particular, in my opinion, has publicized a very sound strategy towards adoption of the Internet of Value. And if you're looking at the long term, the wide scale, and if you zoom out, it's easy to see that the technology behind XRP and the team at Ripple is more promising than most people actually know right now. Like, for instance, everybody thinks that Bitcoin has a lot of longevity in it, and it's possibly the case because at the end of the day, perception is what drives a lot of investment, especially when it's speculative. But yeah, look at it this way: a lot of banks, a lot of governments are needing something that is reliable, something that is tested, something that is efficient. And if a technology offers all those things, it stands a better chance of success. And I don't think Bitcoin is going to do that, because at the end of the day, it's already been a public thing that Bitcoin is, again, not good. It's used by criminals. It's been used in illicit activities by ABCDEFG. Like, there's a lot of negatives against Bitcoin, especially when it comes down to investing in such a tool at this current stage, when it's already realized a lot of gains. It's already been profitable for those that were in at the very beginning. I don't think there's much upside for it unless for a short amount of time. We're talking longer term. I think there are other technologies that stand a better chance, and that, in my opinion, draws my attention to Ethereum, because that's a project that keeps evolving, and XRP, because that shows a lot of utility in the long term when it comes to efficiency, cross-border payments, and also a focus on just payment settlement in general. You have banks like the ECB, you have the Federal Reserve representatives that have alluded to tools that they're planning on implementing to, soften the blow to economic imbalance and market crashes. So it's only one's argument, or it's only one's assumption that these blockchain-related technologies may be involved in that conversation as well. But then again, don't take it from me. Do your own research. Look into things as thorough as you possibly can, and come to your own conclusion. But in my opinion, I hope this helped you guys. And if you at all find yourself in a position to actually invest in these assets, especially the digital assets, I have a link in my description that could at least help you in securing those items, and that is a link to Ledger. It's an offline, crypto wallet, in that it's not necessarily connected to the internet. You can actually use it as a way to store your assets offline, and it minimizes your risks of being compromised. Again, keeping in mind that not everything is bulletproof. It's just another layer you can use to at least, buffer yourself from any risks that transacting with digital assets could pose. But again, go ahead. It's also, I should probably also mention this, it'll help you with your asset security, as well as also help my channel out, because obviously it's an affiliate link, and at the end of the day, we all know how those work. But again, user discretion. There are a few other links in my description as well that lead to some really good content from other creators that I follow very closely, and just anything relevant to this particular video itself. So go ahead, check it out. Thank you for watching, liking, and also subscribing. Don't forget to hit that notification bell, and just to be apprised of any time I post a video on here. I'll do my best to follow up with some more. I have some really interesting content loading up for this weekend, but it really comes down to my overall schedule. So we'll go from there. But I will leave you guys with one last video, and this one is a surprise for anyone who's watching this. I hope this rings bells and at least points you in the right direction as to where I think we are all going anyway. So all the best. And don't forget to also follow me on Twitter if you're looking to chat further. And again, until next time, be mindful of the trends. Cheers.
Hi, I'm Tim Wan, Director of Innovation here at ATB Financial in Canada. We're the 9th largest financial institution here in Canada with $43 billion in assets. We were the first Canadian financial institution to move real money to real FI across the ocean in near real time. We couldn't have done that without a pure SAP digital core banking platform. And we couldn't have done that with great partners such as RippleXRP and Frank Bobarak, who's the head of product there, and Ripple. Where that transaction from us to that German bank, RippleXRP, may have taken 2 to 6 business days in the past, it takes an average of 8 seconds. And I'd love to introduce you to my friend, Frank Bobarak at RippleXRP in Germany. Frank came to visit us here in Calgary, Alberta, Canada, and we went to Banff and had an incredible party and an incredible time. But now that the party's over, I actually owe him $1,000 Canadian. And I'd love to show you how that we sent it to him right now. I have $1,000 Canadian loaded at a rate of 1.47 Canadian with a receiving fee of €1. And that'll end up as 679 euros and change. Does that sound okay to you?
That sounds quite good.
But I'd love to send that. And now the payment's executed. Let's take a look at what's happening on the Ripple Connect platform on RippleXRP's administrative dashboard.
And yes, and I can give confirmation that the payment has been received and is settled. The money has arrived in Germany. Thank you so much.
Yeah, it takes 8 seconds, is that correct?
Yes, instead of 4 days. Great.
And then we also have received confirmation here that payment has been sent and Frank has received it.
Here's the email which states that the amount has been processed.
Ripple provides a great platform for vertical integration, for new services to be built upon. We have an opportunity to seize the moment today and to do something tangible and real with this technology.
We used the Ethereum platform, which is and still is to this day a leading technology within this space. And we discovered, quickly that there are definitely pros and cons with respect to the architecture of that system, how the database is shared, understandably in these sort of open and unpermissioned environments. And so when we looked at our use case, eventually we realized that the consensus mechanism and this broad sharing of data across the network didn't quite fit. Certainly, I'm sure Andrew would state that if he was sending a payment to CIBC, he wouldn't be particularly keen for TD to have that data set at their fingertips or vice versa. So we have a different use case and we have different requirements. All that said, it was a great experience for the developers at the banks, for the business leaders and technology leaders within our various organizations. And we said that this is research that's worth undertaking, and we established the problem set for the next iteration in phase 2. So specifically, we were looking to solve for this privacy dimension, in that if we're going to reimagine a payment system on a distributed architecture, we want to do it in such a way that only the participants that need to see the data should see the data. The other issue that's maybe worth mentioning is with respect to settlement finality, and I've kind of glossed over another fact, is we're really coming forward with the lens of the principles for financial market infrastructure. And so there's a list of 24 or 7 rules, Rod. And anyway, we're using those as our baseline requirements to say these are the objectives. Can this technology meet or exceed our principles for financial market infrastructure?